Welcome to Tesla Daily News Podcast on Tuesday, March 10th, 2026. Today, we're tracking a big autonomy milestone out of Texas, fresh competitive pressure in affordable EVs, and the macro backdrop that's hitting high-growth names like Tesla. Story 1. Tesla's steering wheel-free Cybercab has reportedly rolled off the line in Texas. Here's the hook. Tesla just built a vehicle designed to drive itself, with no steering wheel and no pedals. Context. This is Tesla's most direct bet yet that autonomy becomes a real product line, not just a feature, and it's aimed squarely at turning transportation into software-driven, high-utilization revenue. Details. A report says the first Cybercab came off the floor at Gigafactory Texas, and Elon Musk is pointing to production starting in April. The Cybercab is described as a two-passenger robotaxi built around Tesla's full self-driving system, with no manual override. Tesla is also tying Cybercab to its unboxed manufacturing concept, where modules are built in parallel and assembled late, with Musk suggesting an extreme target cycle time of one vehicle every 10 seconds. Impact. For investors, this is potentially massive, but it raises two near-term stock-moving questions. 1. Can Tesla deliver true unsupervised autonomy at scale without LiDAR, using a camera-first approach? 2. Can Tesla clear U.S. federal motor vehicle safety standards that assume basic driver controls? If Tesla has to seek exemptions or limit deployments to certain geo-fenced fleets, that pushes real revenue farther out. If Tesla clears the hurdles, it can expand total addressable market beyond unit sales into miles and service revenue. Takeaway. The Cybercab is a valuation story as much as a vehicle story. Watch for regulatory signals, safety data disclosures, and any timeline updates that move this from prototype buzz to commercial rollout. Story 2. Macro shock, oil spikes, and Tesla trades down in pre-market. Hook. Oil ripped above $100 and Tesla was down about 1.8% pre-market in a broad risk-off tape. Context. When energy prices surge, markets typically reprice inflation risk, push yields higher, and rotate away from long-duration growth stocks, exactly the bucket Tesla often sits in. Details. A market wrap notes WTI crude surged into triple digits, briefly nearing $120 overnight before pulling back on talk of a potential coordinated strategic reserve release by G7 countries. In that same snapshot, the Magnificent Seven were broadly lower, with Tesla specifically cited as down about 1.8% pre-market. Impact. Higher oil can be a mixed bag for Tesla. Longer term, it improves EV total cost of ownership and can pull more consumers toward EVs. But in the short term, the market impact can be negative for Tesla if higher oil feeds rate hike expectations and compresses multiples. It also matters for Tesla's own logistics and input costs, though that's typically a smaller driver than valuation sensitivity. Takeaway. In weeks like this, Tesla can trade more like a high beta tech stock than an auto stock. Investors should watch oil, bond yields, and CPI expectations as much as Tesla headlines. Story 3. Competition check. GM's Chevy Bolt is back with faster charging and a lower price point. Hook. The return of the Bolt is a reminder that affordable EV competition in the US is heating up again. Context. Tesla has used pricing to defend Model 3 and Model Y volume, but more credible sub-$30,000 options can pressure demand elasticity and margins at the low end. Details. Reviews of the upcoming 2027 Chevrolet Bolt highlight a starting price around $28,995, including destination. It uses a new 65 kilowatt-hour lithium iron phosphate battery and supports DC fast charging up to about 150 kilowatts, with a claimed 10 to 90% in roughly 24 minutes. It also adopts the North American Charging Standard port, meaning access to Tesla's charging ecosystem is increasingly becoming table stakes, not an exclusive advantage. Impact. This doesn't necessarily steal Tesla's core buyer, but it can nibble at the edges, especially among price-sensitive shoppers and second-car households. The bigger investor point is what it does to industry pricing. More viable low-priced EVs can keep the market competitive and prevent a margin rebound from price normalization. Takeaway. Tesla's advantage is still scale, software, and manufacturing iteration. But the low end is getting crowded, and investors should expect continued pricing pressure rather than a clean return to peak auto gross margins. Story 4. Rivian's R2 timeline puts pressure on the compact SUV segment Tesla dominates. Hook. Rivian says its mass market R2 is the inflection point, and it's aimed right at the Model Y's neighborhood. Context. The Model Y has been Tesla's volume and profit engine in the US. Any credible alternative in the under $50,000 space matters for market share and pricing power. Details. Rivian CEO is described as expecting R2 deliveries to begin in the second quarter of this year, with a target price around $45,000. The article cites Rivian's expectation for 2026 deliveries of roughly 62,000 to 67,000 vehicles and notes the Model Y generated more than 350,000 registrations in 2025. Impact: Rivian's volumes won't match Tesla near term, but competitive signal matters. If R2 launches smoothly, it could contribute to a more contested compact electric SUV market, especially among buyers who want a different brand identity than Tesla. For Tesla, the risk is less unit loss and more incremental price competition that limits margin expansion. Takeaway: watch Rivian's early R2 ramp quality and gross profit trajectory. If Rivian proves it can scale without burning cash aggressively, it raises the bar for Tesla to defend share with product updates, not only price. Story 5. Robotaxis are a crowded race. Amazon's Zoox expands testing. Regulators convene. Hook. Zoox is expanding to Dallas and Phoenix, and a national autonomous vehicle safety forum is scheduled with top players. Context: Tesla's autonomy story is not happening in a vacuum. Waymo is deploying commercially, Zoox is scaling its footprint, and regulators are actively gathering the industry to talk safety. Details: Zoox says it will add Dallas and Phoenix to its testing markets, bringing operations to 10 U.S. cities, and it plans a fusion center, command hub in Scottsdale for fleet operations and rider support. Zoox reports more than 1 million autonomous miles and more than 300,000 riders to date. U.S. regulators are set to host a national autonomous vehicle safety forum with the CEOs of Waymo, Zoox, and Aurora. Impact: for Tesla, this matters in two ways. 1. It highlights that autonomy approvals and safety perception will be shaped by the broader industry, not just Tesla's internal metrics. 2. Competitors are building operational muscle, fleet management, remote support, and real-world rider programs that Tesla will need if it wants to scale Cybercab beyond a demo. Takeaway: Tesla's camera-first approach could be a cost advantage, but the market will demand proof. Any adverse regulator commentary on safety or any publicized incidents across the sector can move Tesla because autonomy is a key valuation narrative. Story 6. Market adoption snapshot. Tesla gains traction in Colombia shortly after official entry. Hook. Tesla reportedly cracked the top 20 brands in Colombia within about 3 months. Context: Tesla's long-term growth depends on expanding addressable markets, but each new market also tests pricing, infrastructure readiness, and local competition. Details: a Colombian market report says Tesla registered 296 new vehicles in February, placing it 18th in national registrations and ahead of Mercedes-Benz for the month. Impact: this is small in global volume terms, but it's a positive signal for brand pull and early adoption. For investors, the question is whether Tesla can sustain momentum beyond early adopters and how pricing and financing conditions shape demand. Takeaway: international growth can help diversify Tesla demand, but the stock will care most about global quarterly deliveries and margins. Market wins like this are a nice tailwind, not a primary driver unless they scale. Let's wrap it up. The themes today are autonomy acceleration with the Cybercab, intensifying EV competition at the affordable end, and a macro environment where oil and rates can swing Tesla quickly. Tomorrow, keep an eye on any follow-up from regulators on autonomous vehicle safety, plus any concrete detail on Cybercab exemptions or rollout plans. If you want Tesla-focused updates every day with an investor lens, subscribe to Tesla Daily News Podcast and follow us wherever you get your podcasts.